Hi, everyone. Today was an overall solid pullback in the stock market. Looking at the New York Stock Exchange, we can see volume was slightly higher than the day before. But as you can see, with the bullish wick of good reversal off the intraday lows, prevents it from being a serious distribution day. However, technically, it's a distribution day, down over 0.2, 0.25%, depending on what you want to use on higher volume the day before. But like I said, that wick prevents it from me to being a real distribution day. Technical, sure. Real, no. The SP 500 avoided a distribution day with it only closing down 0.12%. The Dow Jones Industrial Average closed down only 0.07%, but volume was lower than the day before, so that's good. You can see all the pocket pivot point signals in the Dow Jones Industrial Average. Last time that there was a flurry of pocket pivot point signals, I want to remind you, we ended up selling off. So, I would say before that, oh yeah, it was bullish, but it's not, because look at last time we got pocket pivot point signals, sold off in April, then a new series of them again in June, July, sold off August, got a series of them September to October, sold off. Now here we go again, so we'll see how all this ends up playing out. But for now, everything is good. The Nasdaq actually pulled back on slightly lower volume, only down 0.11%, so that was good overall. The Russell 2000 was weak, down 0.51%, but still an intraday wick off the lows, basically gives this index a very nice solid look. And if we look at the oversold my oscillators, MACD is trying to round up on the Russell 2000. Nasdaq, the MACD is trying to round up also, and the S&P 500, you can see it's trying to start to steady its downward decline. Looking at stochastics, you can see SP 500 continues to work off the overbought condition while holding up extremely well. The Dow Jones Industrial Average, similar situation. NYSE, actually a way better situation. The Nasdaq, same thing as the NYSE. It's working it off quite well. And then the Russell 2000 is getting to around that zero level. And I tell you what, this index is held up well coming off these highs. So I don't know, it looks really good out there. And speaking of looking really good out there, I only had one full sell, one stop hit intraday that completely knocked me out of position. MFRM took me out around 62.50 because I had it below the 62.60 when I decided to add back the position that I was shaken out of that day. It has now failed, so I'm gone. Now you can say with the long entry being back here, our first one with MFRM, you could say you could use the 58.27 level as your final cut loss area. Me, I'm going to go ahead and get the hell out. It's closing below the 50-day moving average on more heavy volume. Weekly, it's a pretty big decline. So even if it can hammer its way back and get higher, I just don't see how it's going to fight off that resistance anytime soon. So I want to go ahead and move on to better opportunities. So MFRM, technically, it's not a full sell technically if we're using that first buy signal, but for me, that's a full sell signal. You get max red bop on top of the distribution. I don't care that we get an intraday bounce. When you have so many stocks looking good like we do, you got to get out. And then HBI hit a sell stop. I had one of my sell stops just below the 110.61 level. Of course, as it would have it, HBI decided to go ahead and trade down to there and stop me out. However, if it had not, because there's so many good stocks out here, with this stock closing below the 10-day moving average on above average volume, it is a 25% sell no matter what, especially with it closing, even though it's by a penny, lower than where it opened. So it's a 25% sell. My 25% sell was hit intraday at 110.60 something. So you'll be getting out with a better sell on that partial position. But besides that, a critical mistake happened today only because, what are you going to do? I'm going to go back a day really quick. RDWR. Last night, RDWR, because of all the strong green bop and all the accumulation, had a buy stop on books, especially after this day. But after yesterday, it had a slightly update pocket pivot point signal. I looked at this and I was like, you know what? If it breaks out here, it's not going to probably work. It's too short term. I'm already upset that I did the TSEM trade, which is working out, well. But it's like I expected that base to last longer. So I feel that if I keep RDWR on, it's going to break out and I'm going to pay for it. Whoops. It broke out and really worked today. Now you want to hear something funny? There is, what stock I replaced it with as a sell buy stop order, ILMN. I looked at ILMN, looked at RDWR, and was like, okay, RDWR looks better, but the base is shorter. ILMN, higher quality fundamental stock, and base is longer. Today, broke out. Didn't do what RDWR did, though, did it? No. Instead, it's actually pulled back below to where it actually opened. Now, there's no sell signal with this, with volume being below average. but I'm already going to go ahead and where I would have my sell stops initially would just be an emergency one right here. That's it. Just an emergency sell stop below the 176.93 level, which I will put on, but I'm also going to put, so half of it's going to go there at the emergency stop level, and the other half is going to go right below 185.81 because the breakout is not breaking out immediately. And RDWR, damn you. Now, that's not that bad, though, because, once again, we got a lot of long signals. Not a lot, but, I mean, there's a lot. I'm just not taking them. But the ones I am taking, Holly. Holly is breaking out of an ascending base pattern, producing another pocket pivot point buy signal in about 6 sessions, so 2 and 6 sessions. This breakout looks good. It's spotted by another great trader that we have in the chat room and another recent subscriber who seems to have his game on pretty well. He also noticed it, so I guess that's good that we all notice it. However, I never like that all eyes see the same thing, but with my number 3 guy, Paul, finding this also and agreeing with me that this is a good breakout, it seems like we're good to go here, and we don't, once again, we don't risk much if we're wrong anyway. Close below the low a day here on a closing basis, and we're completely out, so we're not going to risk more than 4 or 5% on this position. And then VEEV, mentioned how much I loved it back here. Wanted it this after this day. I was like, oh shit, it might run without me, but it pulled back quite harshly the past 3 days, and I was like, oh shit, VEEV is now off my radar. Well, today, boom, welcome back. BOP is green, volume surge, pocket pivot point signal, and a buy before the actual breakout. So VEEV is a new long position also. I do like this chart a lot, but I don't love it because I would have liked to have seen it pulled back while BOP either stayed the same at this green level back here or built higher. But still, it's an excellent stock. 99 EPS rating, big earnings and sales growth. I like this stock a lot. I cannot stress that enough. Holly is a great stock too, but it's not something that I've been like, you know, salivating over like VEEV. So probably Holly will work and VEEV will fail. And then the final long position is a pre-perfect speculator scan stock, and it's got a very bullish technical pattern. Fundamentals are solid. They're not amazing, but they're very solid. There is growth there. There isn't huge growth. Steady mutual fund ownership. Dividends are starting to increase. And ALGT, after the gap up over here, has held that level very, very well and is now breaking out. Further confirmation of that gap up signal and a pocket pivot point signal and heavy volume with green BOP. So this too is a new long position. Now, I don't have much capital left, so I have to take most of my buy stops off. But the one I do have enough capital to leave on the books is for ROG. ROG is staying on the books. And then in my margin account, I still have GERN on and LABL on. But for my IRA, which is how I really always gauge the percentage that you put in a portfolio stock, I always operate from a cash-only basis whenever I give trade recommendations. LABL would not be in the IRA, is not in the IRA. GERN is not in the IRA, even though it's a beautiful setup. But Raj is, so we'll see if Raj can break out just above the recent highs. Besides that, I've taken others off. Obviously, I'm going to wait. DTSI is now off in the margin account. SIG, I'm waiting to put on in the margin account. TTGT, I'm waiting for a move. And look at our current long PCYC base out. And the one that I want the most is EIGI. If today's volume would have been above average and if it would have produced a pocket pivot point signal, EIGI would be along today.